Hello traders, welcome to another daily analysis for February 16th. Right now we are at February 17th, Friday, about an hour and a half prior to the London Open. So let's get into it. Today was another quiet day with no tier 1 data in London sessions. And there wasn't any events at all throughout the day. So the market was very quiet. Most likely, most pairs traded in the range bound area. And we have a little bit of continuous of US dollar weakness, all the way until pretty much until the end of the day. This was not accompanied, of course, by any fundamental data. On the contrary, fundamental side of the US dollar continues to gain a lot of momentum. So the only explanation, could be profit taking. It could be simply people are wrapping up ahead of the weekend, or maybe a lot of people are worried about the new executive order that is about to come next week by Donald Trump, and a lot of new things. So a lot of policy concern for sure. Monday is also a U.S. holiday. Of course, for currency, it does not affect too much, but it will be thin liquidity, whenever U.S. traders are not around. It's also a Canadian holiday as well. So that's just, the two major countries, you don't really have much liquidity on Monday. And the New York session, as I mentioned, the data continue to be very positive for U.S. The Fed manufacturing index was very positive. In fact, the best number that we ever had since 1984. So this was a really big surprise, but also in line with previous Empire State Manufacturing Index. So the fundamental side, I really have no doubt that it's getting there. We also have Fed member coming out today. Again, everybody is very congruent in terms of outlook. So if you ask what's a roadblock for US dollar, it's really the White House and Trump administration, because policy concern still at large for a lot of traders don't want to jump in ahead of it. Again, we are right at February, almost at the end of the February. Still very early for the new administration, but you can already sense how volatile it is, and that's pretty much how 2017 is going to be. A lot of political volatility that coming out from White House, coming out from Europe, and coming out from other countries as well. Another notable data, New Zealand dollar have the retail sale later in New York session. It was not really a tier 1 data, but this retail sale, both headline core and also the manufacturing PMI from New Zealand, three data are all quite soft. So it's not a good picture for people who want to long New Zealand dollar. For example, for myself, because back then it was mentioned that New Zealand dollar had been talked down by the central bank, and the only remaining strength is the fundamental recovery. Of course, today the data did not give New Zealand dollar too much push, so that's why we saw a little bit soft response in the New Zealand dollar right now. Today we also had unscheduled press conference by Donald Trump. Now this is, again, just show you basically what's the behavior for the White House. It's unscheduled, it's just a sudden press conference, and there wasn't any mention for economic plan or tax reform, things like that. The press conference was mainly for him to address the issue of Russian. As you know, that one of his strategists, Michael Flynn, had quit this week over these Russian issues. So I really think it's just more like a platform for him to rant. But nevertheless, it didn't create too much volatility. But of course, it gave traders, investors another negative issues that they know that the political side of the US is really going to be quite unstable. The equity market today again went down after previous consecutive days of higher high, and that's very normal. You're always gonna have some pullback. Nothing too drastic that we need to worry about. That means the overall sentiment is still quite supported in upside. Gold also went up, of course, and the US 10-year EL went down. So all quite congruent. WTI was virtually unchanged today. So right now, my current view for H8 currency. For Euro, I think, again, we have no major update on fundamental picture. We do have the ECB minute today, which is quite congruent with the ECB press conference last month, that very little intention to remove the stimulus. So that just shows you the fundamental side of the Euro. It's still very negative. Sentiment is also very negative. Just notable that in March you will have the Dutch election coming up, and March you will also have the Federal Reserve meeting. So you might have a perfect storm where one raised the interest rate and where the other one had this negative sentiment from the politics. If that's the case, then euro dollar will drop significantly. And the French election, the Fillon scandal continues. He had plead for people to stop the investigation. However, that continue, and that means we will have more political turmoil. Le Pen, the newest poll, still took the lead, and that's pretty much where the euro is. So the only good news coming out from euro is that they had officially signed a trade deal with Canada. So that's a positive news for both euro and Canada. Of course, the trade deal is always good for both nations. Especially previously, both nations are very reliant on trading with US, and now they both basically open up a new trading partner with each other. So that's a positive news business-wise for both euro and Canada. For US dollar, no major data today, but the continuous of positive fundamental data continue to support US dollar. Sentimentally speaking, we didn't have too much negativity for now, so that's why basically for this week we did have a structure change because Janet Yellen became quite hawkish, and fundamentally everything is very well supported. So right now, US dollar, if you ask me, both fundamental and sentimental are all very congruent and looking to the upside. So what is the reason that dollar is being sold off? Again, that is a sentimental noises because there's no really catalyst to driving down. It's a political worry, politics concern. It could be profit taking since today it's already a weekend and Monday is a holiday for US as well. This can all be reason to contribute that. And again, as I mentioned, there's no right or wrong of how you like to trade it, because if you're just looking at the chart and you say you're going to sell dollar, that's perfectly fine. It really depends on your own time frame. How would you like to trade? What's your approach? And the very important thing is you want to be consistent with your approach. That is the only thing I will recommend, is that being consistent with your approach. So if you approach a certain trade with a shorter time frame, with a more like a technical base, then that's really how you want to manage it. On the contrary, if you approach a trade with more long-term, maybe daily, weekly perspective, more a fundamental approach, then that's also how you want to manage your trade. For me, that is the key, just to stay congruent in your approach. For British pound, I didn't write anything here because I don't have any updates at all for British pound. We don't have anything happening in the Brexit, nothing mentioned about that for now. But I do think it's just basically a quietness before this huge perfect storm. Because March is going to be a very volatile month for British pound, as the triggering of Article 50 officially starts in March. And on top of that, the euro will also have the Dutch election. So I think March pound will be very volatile, but before that, it's a kind of quiet moment, maybe the last piece of quiet moment that we have for British pound. For Canadian dollar, we do have another positive report from Iraq. Data shows that the exports have dropped in line with what was promised, and OPEC also announced the possibility to extend or deepen supply cut at May meeting if the oil stock are still too high. And oil stock has been built up for the past 3 weeks from the crude oil inventory. So that of course is not too positive, But again, a whole market pretty much hedge out each other. So right now, because OPEC still have a much larger influence, we will still hoping to see oil continue to go up, and that's of course going to be beneficial for Canada. Canada also again signed this trade deal with Europe, has a very positive meeting with Trump this week, so it's still a very positive currency for me. For Australian dollar, the risk of sentiment today had pressured this commodity currency tremendously to the downside. We don't really have any fundamental catalyst, but you will see a lot of profit taking because Australian dollar, what happened is it's a little bit overextended this week. We don't really have any fundamental data to driving in either way. And many of you know I do have an Aussie dollar both long and short in different time frame. So this kind of profit taking is very, very normal. Again, it really depends on your approach to the market and how would you like to either hold it, short it, or long it. It all depends on your own personal analysis. For me, as I mentioned, I have both long and short in different time frame and different approach, and I'm going to maybe address that later on. New Zealand dollar, again, risk of sentiment today also pressure this commodity currency. But another more negative thing is that we do have a disappointed data from New Zealand, from retail sale, core retail sale to manufacturing index. And that's not a good thing because previously what's supporting New Zealand dollar was the fundamental data, as I mentioned already. So right now, since we don't have the continuous of strong fundamentals, it's not really a currency that I want to hold it anymore. And many of you know I have a New Zealand dollar long trade, but because of that, I actually exit that trade already because I don't really have any reason to keep holding New Zealand dollar anymore. Japanese yen and Swiss franc both are quite neutral at this moment. They both are fundamentally negative for now. Sentimentally, really no particular catalyst to drive it anywhere. But of course, they are reactive to the risk sentiment. So since today we do have the risk of sentiment, then both currency will be benefited largely. So I wouldn't say short or long it because like I said, sentiment can change every other day. And it's really not my best talent to predict the sentiment. If you are very good at that, then by all means you can trade sentiment. For me, I'm not really good at predicting the sentiment because sentiment can change any moment with any piece of news. So for me, I don't really get into this trade sentimentally speaking because for me it's hard to predict, but I'm only traded fundamentally speaking. So looking at the fundamental side, both currency are still negative, and that's why I'm more leaning toward downside for both Japanese yen and Swiss franc. Another interesting thing is that we do have another Bank of Japan officials and a lot of investment bankers coming out saying that dollar yen should reach to 120 level. Now it's this kind of prediction or interviews are very normal. But you have to understand in Japan, it's a little bit different because most bankers and hedge fund managers act exactly the same in Japan. What happened to Japan is that you have a lot of insider news. You don't really have too much so-called creative traders. People tend to exactly follow what happened to the policy in central bank. And that's why yen pair always have a very large move if they start to move. So what I'm trying to say is that we have seen this 120 level being mentioned many times, especially after the Trump and Abe meeting. So it's very possible that Trump and Abe maybe reach certain sort of negotiation or agreement that they don't want to see dollar yen reach to a certain level. That maybe Donald Trump give him a green light to that dollar yen continue to weaken, but not over a certain level. Now, of course, that's just rumors that we had seen speculated on different forums, but it could be very well much be a truth that dollar yen can reach 120 because fundamentally that is the direction for Japanese yen to continue weaken itself in order to benefit the export. So if that's the case, then dollar yen in the more longer term perspective will still be going up. Okay, so that's pretty much the fundamental side of the currency. Let's take a look at my current trade. So first thing first, as I mentioned, I got out of my New Zealand dollar trade for the very simple reason that I don't think any reason to. So I got out basically at break even at 72, 0406. Right now we are really going to the downside. And for me, the only currency that I'm very certain to long right now is still US dollar. That doesn't mean you cannot short it in an intraday perspective. Again, it really depends on your own time frame, right? So I would never say, even when people tell me, hey, I'm short dollar, I would never say that they are wrong, because it's really depend on how you manage your trade. Another trade I have in the intraday perspective is still this Aussie dollar. I'm still holding it, and I'm holding it for the very simple reason that I'm still very favorable for US dollar, and I do think the sentiment might turn to a risk offside just because people pretty much want to wrap up before the weekend. Consider that Monday is a holiday, and Trump already said that he is going to introduce the new executive orders next week. So maybe a lot of people will try to wrap up just to be safe. So that's why I am still holding this trade and hoping to maybe exit or even profit at the lower side. And that's pretty much my two intraday trade. In terms of my daily trade, so first thing, Aussie Swiss. Now today we have this nasty drop. Now a lot of people got scared, and that's perfectly normal. You do have this very, very strong bearish big shadow. So for me, in this kind of situation, again, it really depends on how I approach the market. Since I approach this trade with a fundamental perspective, so I will only get out if the fundamental side of Aussie and Swiss franc had shift, or if we have a very, very strong sentimental events. Otherwise, I don't have any reason to get out of my Aussie Swiss trade. And if you look at the trend, you are still in this very obvious uptrend. So for me, that's just my logic. It doesn't mean I will be right. It doesn't mean I won't get stopped out. It just means that's how I approach the market. It's very important because at the end of the day, you want to have a more congruent approach. So since I don't have any negative reason for Australian dollar right now, I also don't have any positive reason for Swiss franc. Then of course, if over the weekend, something very catastrophic happens, then I will get out of this trade. But unless that happens for me, this kind of price action is, for me, it's just a regular, a normal price action where, since will react when it reach certain resistance and support zone. So that's one of my trade right now. My Aussie yen trade also in a drawdown, and exactly same thing. I will hold it unless I have any sort of catastrophic sentimental events. And dollar Swiss, same thing. Huge nasty drop, and that's why I say, a lot of people short upon this kangaroo tail, and it's great. You pretty much reach one-on-one things like that, and that's fantastic. So for me, I'm still holding this trade. Nothing had changed in the fundamental side. Dollar yen, exactly same thing, a little bit drawdown for me. So basically all my trade is in this drawdown because all my trade, a lot of yen and Swiss franc trade had all been reactive to this risk sentiment. Canadian dollar is holding well, more better than US dollar and Australian dollar. So just show you that Canadian dollar still has a lot of internal economic strength into it. Pound Aussie, I'm still holding this trade, and for a very simple reason that fundamentally speaking, Australian dollar is still very stronger than British pound, and I think this trade might still go into the sideways movement. But there's more. The longer we are in this trade, the better we are fundamentally for Australian dollar, because again, when we are approaching March, you will start seeing a more volatility for British pound to the downside because of the Article 50 is going to be officially triggered, and that is going to be a very big event for British pound. Euro Aussie, exactly same thing, continue to go down with nice solid green candle. That doesn't mean we're not gonna go up. We might go up tomorrow, but for me, since I got in fundamental because of the fundamental approach, so that's where I'm going to keep either exit because of that, or if we have any catastrophic events, then I'm going to get out. Otherwise, I'm holding this one. So that's pretty much all my daily trade right now. So let's go over the rest of the pair. Just give me 1 second. Okay, so take a look at Euro Pound right now. So Euro Pound again continue to edge higher for Euro Dollar. We are really just in the range bound area. Really nothing mentioned, nothing to address for this pair. Euro Swiss, same thing. I don't really have anything to say. Euro Dollar, we are keep going up, climbing up in this very interesting area. 1.07 will be a very strong support. Of course, the next one will be 108, and there will be a lot of seller in this area. And you have to remember that a lot of people are trying to price in right now for a March Federal Reserve meeting in May. And how do I know that? You just look at the futures market. Interesting about the futures market is that they don't react as fast as spot currency. So that's why it does give you a pretty nice overall pictures about what's going to happen and what might happen. You can also look at the bond yield spread between Euro and US dollar. And those are all pretty significant indicators, fundamentally speaking, if you want to trade a spot forex. So Euro dollar, I'm looking to short if we can climb a little bit higher with a reversal signal. Euro Aussie, just I mentioned already. Euro CAD, I'm also looking to short, as I already draw this nice line here at 1.4 will be a nice area to short. Euro New Zealand, I'm also looking to short, but I'm less confident about New Zealand dollar right now, just because we don't really have a new fundamental data to support it. But nevertheless, Euro is perhaps the weakest currency I have right now. Really, I think it's the most bearish currency right now. Now, Euro Yen don't really have much reaction. Pound Swiss, again, all the British pound pair, I'm not doing anything for now unless we are at a very significant level. This pound Aussie, since I'm already in, that's why I'm holding it. Now, if you are not in this trade, I wouldn't suggest you to get in British pound trade because there are more interesting catalysts to come in March. You could price in, but only if you are reaching a certain level. So, for example, if you want a short cable, we are still in pretty much in the range area. But if we went higher to, let's say, 1.2650 or 1.27, you could price in because the general direction for British pound is looking to the downside. Pound CAD, same thing, looking to short, but we are really very interesting about pound is that generally speaking, they do have a large movement, but if you look at the daily range, it's just really going downhill, right? But with generally, you have at least average 100 pips or so. And yesterday, the day before, pretty much all these past 2 weeks, you don't really have any movement. So just show you a lot of indecisive things for British pound. Swiss franc, Japanese yen, not something I trade at all. Dollar Swiss and dollar yen already mentioned. Now dollar CAD, of course, it's very interesting to look at. This is a very strong reversal signal. But for dollar CAD, because they both are strong currencies for me, I don't like to get into it. You could trade it, technically speaking, yes, it looks like, but if you do it, just understand your upside is really capped at 1.32 max because that's a significant resistance area. You do have a near-term resistance, 200-day EMA. These are going to pressure it. Now, on top of that, fundamentally speaking, Canadian dollar is very strong right now. So I wouldn't say which one is stronger. That's why I wouldn't enter this kind of currency pair for now. Aussie Swiss franc, this is the one I'm in. Now, Aussie dollar is also the one I'm in, this one in intraday perspective. So I am happy to see at least a red candle today. But most likely we might just go into a sideways direction for today, because I don't really know where this thing is going to go either. So just for my own personal plan, if nothing react out prior to the weekend close, I am pretty much going to hold this trade. And a very simple reason is because I'm in a lot of Aussie long right now. So for me to hold an Aussie short will be a sort of hedging to protect myself over the weekend. If I'm not in any Aussie trade, and this is Aussie dollar will be is my only intraday trade, then I might just get out prior to the weekend close. But because I'm also have an Aussie long, so for me to hold an Aussie short, even though it's different time frame, it's a nice hedging prior to the weekend close for me. Aussie CAD, I don't really have anything, same as Aussie Newsy. Now Aussie Newsy, you do have this, right now you do have this strong bullish candlestick. So Aussie still it's stronger than New Zealand dollar. And so it really depends on, of course, you are at a very high point. We should have some pullback if any of you want to loan. The good thing about Aussie Newsy is that they both are very good. They hedge out each other, so you have a very limited risk in terms of the sentiment, since they both are commodity pairs. If you want to ask me which one have a better bullish strength, it is still Australian dollar, for the very simple reason that people just like to buy Australian dollar more than New Zealand dollar. Now Aussie yen is another daily trade I'm in for long right now. Swiss, I don't really have anything here also, and CAD yen is still same thing. This is the one I'm in. New Zealand Swiss, New Zealand dollar. Now New Zealand Swiss, this is I remember yesterday or the day before I say that this is a nice candle, but your upside is capped, and now we don't even reach that. It just dropped already. So New Zealand dollar again don't really have that much strong sentiment to hold it up. So that's something you have to be careful if you are in New Zealand long, and that's why basically I got out of my New Zealand dollar trade, especially versus US dollar. It doesn't have that much strength. New Zealand, I don't really have any signal. So New Zealand dollar is not really something I'm well getting right now. So basically that's what happened to me. If you want to say, all my daily trade is in a little bit drawdown right now, but because fundamental strengths and the sentimental direction are all still looking on my side, that's why I'm holding it. That doesn't mean you should hold it. It really depends on how would you like to trade. And I think the approach is really not the key point. There's so many traders with different approach, fundamentally and technically speaking, but it's congruent and consistent approach or management will be the most important aspect of trading. Okay, so coming up next London session, there's nothing really notable. And for New York session, I don't think we have any tier 1 data. Let me see. So for Friday, the only thing is the retail sale. So this one is tradable if you want to trade it for British pound. Of course, I am looking to sell it, right? And the reason, just to give you a scenario, the sterling had dropped about 18 to 20%. And this kind of effect is going to reflect in the product, because now your currency becomes so cheap. So of course, product and cost manufacturing become very expensive. Now, producer is going to reflect those things on their product. So that means that the product is going to become more expensive for the consumer. And that's why the retail sale, generally speaking, is looking to the downside. Now, if we have a continuous of negative retail, then Bank of England will have to ease further for their currency. That is really not a good picture for UK's economy. If you look at the previous data, as again, last time was a huge drop, a big surprise for people for last time. So we are expecting a much better number this time. So if we have a miss to the downside, you will see another huge selling into British pound. On the other hand, if you have an upbeat number, I pretty much not going to do anything about it, because what happened is that previously we all have a pretty good fundamental data for UK, and as you can see, pound did not react to that very well. So when pound versus euro as the most bearish currency, people are just not interested to buy British pound right now. And a very simple reason is that anybody who get into it are pretty much going to face a lot of uncertainty in March. So that's why the bias is more to the downside. So for me, I do want to trade this retail sale data, but I'm only going to trade it if we have something that's negative than the expected number. So that's pretty much what I'm going to do. Let me give you just give me 1 second. Let me give you the census, so that if you're interested to trade it, you have a better chance. So with expected number is 1%. Maximum is 1.7. Again, I'm not going to trade. I'm not going to buy upon that. Negative is 0%. So if you have anything that's lower than 1%, that's a negative already. But for me personally, I want to look for something that's in the negative side. So if I have anything that's like a negative number, that will be very, very good for me to sell it. So if later on in London session, retail sale, British pound, negative number, I will definitely sell it. So which pair I'm going to pair up, I'm pretty much going to go with dollar. So cable will be my choice. And for the very simple reason that right now the equity market is going to the downside. We might have a risk of sentiment today, really depending on how the currency react. Nevertheless, I am going to short cable if we have a negative number out of these retail sales. And as you can see, really nothing else after that. This is a very quiet Friday. Things will wrap up, and that's pretty much it. Again, just as I said, Monday is a holiday for a stock market, bank holiday, not for currency market. So basically, that's what's going to happen. All right, so that's pretty much the analysis for today. I'll be back tomorrow with another daily analysis. Let me know if you have any question, and I'll be more than happy to help you out. Okay, thanks for watching. Bye bye.